Good morning and welcome back to Almus Market Mornings. President Trump's tariff agenda got a temporary lifeline as a federal appeals court paused a ruling that had struck down key portions of his trade policy. While the legal fight continues, markets now await some clarity. Meanwhile, on the data front, inflation in Tokyo jumped the most in 2 years, keeping pressure on the Bank of Japan ahead of its next policy move. In the US, revised GDP data showed a slightly smaller contraction but softer consumer spending. JK, we have seen some big moves in the last few days. Gold staged a good correction followed by a brilliant recovery. We had the dollar strengthen and then weaken again. And especially going into the month end, how are you reading the market positioning?
Yeah, good morning, Saraj. Overall, dollar is in a range on the weaker side, of course, but we are started to see some bigger swings now with a lot of news, particularly since yesterday. So the morning news was about the tariffs being struck down by the International Trade Court. But then the Federal Appeals Court has again reversed that. So the situation is still somewhat fluid, as you said. And in fact, there is a news which came today morning where it says that the Trump administration is likely to go in for a 15% tariff for 150 days. So it's very fluid, as I said, and markets really are somewhat in a blind as far as tariff is concerned. But in any case, I think tariff will come in some form or the other and some percentage, and that is definitely a higher uh, tax on goods compared to what was earlier, and that is going to impact the economy, inflation, and the growth as well. So that's what the market keeps in mind. And of course, yesterday's morning moves were completely reversed later in the day. The gold fall, euros fall, and the yen falling above 146. They're all reversed completely. In fact, they have been stronger than where they were before uh, the trade court ruling. And what has helped it across has been uh, more on the economy news. The contraction in Q1 of 2025, though it was by zero point 0.2 as per the second estimate compared to the first estimate, which put it at minus 0.3%. The consumer spending coming off was dampener, and then the jobless claims jumped by as much as 14,000 weekly jobless claims for the last week. And more telling was the big rise in the continued claims to the high seen in January 2021. And continued claims are a better indicator of how the job market is doing, because if the people who quit jobs and continue to claim without finding a new one, it's an indication that the job market is definitely softening. And of course, we also had another data on pending home sales, which slumped 6.5%. And that was, compared to a 5% plus rise in the previous month. This probably owes a lot to the rise in mortgage rates that happened after the recent pickup in the yields on the long-term bonds. And I think housing market is also not giving a good vibe to the economy. So overall, we saw the treasury yields drop considerably, almost 12 basis points from the highs of yesterday by the day's close. And although the interest rate cut prospects have not changed from the two, which was priced in earlier as per Fed watch tool, the yields dropping is perhaps an early indication of how things could happen in the coming days. And we also had a couple of interesting developments. One is one of the Fed members, Goolsbee, who had said that if the tariffs are avoided by a deal or otherwise, Fed could return to an economic situation where rates can be lowered. So this was like, of course, it is a big gift as far as the tariffs are concerned, but at least it is one of the uh, larger dovish statement that we have seen in recent times. There was also a meeting between Powell and Trump yesterday, and although the discussions were said to be not centering the monetary policy, but more on the economy, I'm sure that Trump would have not lost an opportunity to put across his views on the interest rates, and we will see in the coming days. Along with the news on the tariff, somewhat subdued, we'll see whether after Goldsby, other Fed members also start to speak dovish language or not. So this is what the market is looking forward to. So the dollar had a big swing yesterday. Went as high as 100.45, which was something that we had called for as a technical correction, and then subsequently had slumped with major move coming from euro and the yen. The euro move, of course, has also got some boost due to the month-end demand, and the yen move, of course, is also due to the tepid response from the Japanese bond market, where the yields are still not coming off. And today's CPI data, which you also mentioned, where the Tokyo region CPI has increased to 3.6%, which is the highest since January 23, when it had hit 4.3%. So this keeps alive Bank of Japan's prospects of a rate hike in July. So the N, which had traded above 146 today, is below 144 today. So that's the kind of movement that we have seen in the major currencies. Of course, GBP much less reaction, but it had not fallen, so it has not also risen much. Gold had fallen to 3250, and now it is up at 3320. Overall, the sense about the U.S. economy is one of weakness, be it with tariff or without tariff. That is the sense I'm getting, and therefore the underlying trend for the dollar, at the cost of reputation, I would say that the underlying trend for the dollar is still down. And although near term we will see some more range movement, eventually it looks like it will break down. The influence on the rupee from yesterday's events, the legal events, etc., on the tariff was very limited. In fact, recent moves in the USD/INR have been more driven by the flows. Yesterday's move was somewhat contained in a lesser range because there were two-way flows due to month end. FII numbers were positive, but then we are also hearing about outflows due to some repatriation of stake sale and all that, and a month end demand from the oil companies and importers was also keeping the downside quite supported. So again, the rupee continues to be in the broader range between 84.80 and 86. I think, in fact, 85.75 still holds as a very strong downtrending resistance line. It was broken once, but that was, false break, I would say, because it returned within that line immediately on the very next day. So technically, this level holds a lot of significance, and we await the further developments in the dollar index to know, how the INR behaves going forward. There is also this GDP data from India for Q1 of 2025 that is expected to be released by the government today. Expectation is up to 6.9% growth compared to the 6.2% growth that was recorded for the December quarter of 2024. And we'll also get the official estimate for the full year GDP. Again, it's expected to be higher at 6.8%, although RBI, sorry, it is expected to be lower at 6.3%, although RBI has put it at, their projection at 6.5%. So a lot to look forward to as far as India growth picture is concerned, because we are in a position where the last 1 year the flows have been quite volatile. We had big outflows and then return of flows, and it looks like the global investors are still not making a big move as far as India is concerned. They seem to be taking a short-term positioning. The growth picture will probably give a better clue to the investors. Just to mention that IMF's April World Economic Outlook showed that India is likely to contract much less compared to other economies in the year 2025. So it is a positive note as far as India is concerned. Of course, there is always a lingering of concern about the geopolitical issue between India and Pakistan. That could be keeping the investors on somewhat a slower pace. However, I think as far as the economy is concerned, with lower inflation and higher growth, I think it's going to be a good long-term investment as far as India is concerned, which is what the investors will be considering. Thank you.
Thank you, Jake. And just quickly summarizing, I think one interesting thing which has happened yesterday is the meeting between Fed Chair Powell and President Trump, and I wonder how that was like. I'm sure probably President Trump did not refrain from sharing his strong views on interest rates with Mr. Powell. Apart from that, of course, the news was on the temporary lifeline which has been provided to the Trump administration when it comes to tariffs. So that legal uncertainty that is going to be there for some more time and keep investors a little bit confused. Dollar index had some strong swings, initially strengthening, later weakening. Euro gained strongly, probably due to the month-end demand. When it comes to the rupee, it remained in a range-bound fashion yesterday, and is the Indian GDP point to look out for today. That's it from us today. Thanks for listening. Have a good weekend, and we'll catch up on Monday with a fresh round of updates on the markets. Thanks for listening.